Well, Asian stocks rise for a third day. Automakers and miners lead gains after U.S. manufacturing data showed improvement. The yen weakened and commodities rose. Looking at the benchmarks, gains across the board. The MSCI Asia-Pac Industrial Index up by 2.8%. Materials Index gaining by as much. Now, 7.9%. That's how much China's economy grew in the second quarter. Bloomberg's Zeb Eckhardt joins us now live from Hong Kong. Zeb.
Hey, good morning, Haslinda. Well, you know, clear signs of a rebound here in the world's third largest economy. Let's drill down, take a look at the numbers now. China's GDP growing faster than economists estimated in the second quarter. Growth clocking in at 7.9% and snapping back from its slowest growth in a decade during the first 3 months of the year. Now, record lending and a surge in investment helped tip the scales away from a slump in exports. Now, $500 billion stimulus package is also a big factor here. Beijing relaxing lending restrictions and pumping billions into infrastructure projects. Now, still maintaining future growth may still depend on factors beyond China's control.
China economy may actually hit the 8% targeted growth for 2009. Of course, the export remain a weak link here. And because of that, and I think that Chinese government is going to soon shift the focus from spurring domestic demand back to export.
Now, earlier this month, Chinese Premier Wen Jiabao cautioned that exports will remain weak. Exports tumbled 21.4% in June. And China's also struggling with rising unemployment and falling company profits. Now, the GDP recovery runs parallel to this year's stock market recovery there. Check out the benchmark Shanghai Composite Index. There on your screen, you see up nearly 76% since January. And, of course, there are plenty of warnings about a bubble in Chinese stocks. And as for the economy, even the government is warning this recovery still needs to see firmer foundations. Well, we have a special guest with us today, and to talk more about China's GDP, we're joined by Laurence Brahm, author of the Anti-Globalization Breakfast Club. Thanks so much for coming in and joining us. Good morning. Let's talk first about these GDP numbers. Showing some solid growth here. How believable are the numbers? How confident are you in this recovery?
Well, I'm not confident necessarily in the recovery, but I think the numbers are believable, because this is the largest stimulus package in the history of mankind. And what has happened is China, over the first quarter of this year, has spent over 4.6 trillion yen in terms of infrastructure investment to stimulate the economy. Now, that's more money than was spent in all of 2008. So they have to have a rise in the GDP for the second quarter. And it's estimated they'll be spending another 5 to 6 trillion yen over the next 2 quarters and into next year. So certainly this is a revival, but it's a revival that's being driven by government spending, infrastructure investment, and of course it's being done in the lead up to the very sensitive 60th anniversary of the People's Republic of China founding. So they want the economy to be robust, particularly this year. The question is it sustainable?
Laurence, of course, solid numbers that we saw today. Of course, we also have record lending, which is fueling China's economic growth. How much of that credit is getting pumped back into the stock market?
Well, the money is just being basically, as they say, shoveled out of the banks. That's the term that Chinese bankers are using today. And of course, this is, again, part of the stimulus package. We have to remember that the stock market in China is not an open capital market. It is still very much a domestic market and very much driven by state spending. And of course, the effect of this is an overall growth of the economy. But how much of the production, how much of the activity is actually limited to just spending right now and not actually funneling into real kind of productivity?
Laurence, let's talk about the export picture. Obviously, that's so critical. When do you perhaps see a rebound there? How critical is this going forward for China's economy?
Well, to a great extent, China is betting on the recovery of the U.S. economy. And this is very, very critical to them, because what they're betting on is that the U.S. economy will come into a recovery sometime at the end of this year, early next year, and that consumption will revive in the U.S. But what people are not thinking about is that possibly this whole global financial crisis is actually going to be restructuring the very values and the very nature of consumption. To a great extent, the U.S. stimulus package is driving consumption. But for all of us, the problem of our global economy today is too much consumption, too much debt-fueled consumption, and in turn this is creating the strain on our global resources and the environmental strains, which are going to be the side effects of this entire package, both in the U.S. and China.
Laurence, you asked the question earlier, is this growth sustainable going forward? Some are talking about 8% growth, some even 10% growth. Where do you see growth headed?
Certainly for the next 6 months, you're going to see high growth. There's no question about that. It's absolutely essential for the Chinese government to maintain social stability, particularly in this sensitive political year. This is a very question of the mandate of heaven, as they say, for the Communist Party. So they're going to be spending money, they're going to be driving the economy forward through the stimulus package. And so certainly for the next 6 months, I think you're going to see, to the end of the year, a booming Chinese economy. Without question, that will be the situation. What happens after that?
What's the one biggest risk for the Chinese economy?
Reliance too much on their own spending. Basically, what's happening is by spending so much right now, they themselves are pulling money out of the banks. They are actually recreating the non-performing loans that the former Premier Zhu Rongji spent so much effort to try and clean up the banks.
Right.
And this, of course, is the highest risk that they have.